Okay, so let me just briefly go through the context, the background of this report before I share some of the findings, at least the summarized findings, so that we have some food for thought for the panel discussion today. So since March 2020, the COVID-19 pandemic has severely impacted our country's overall businesses. We have had lockdowns and also the fear of subsequent lockdowns, extended periods of restrictions on movement, which led to a lot of anxiety about losses in business and also shortened runways for many small enterprises, startups, and the fintech startups are no different in this regard. So in this report, we tried to assess this impact of the COVID-19 pandemic on the fintech ecosystem of Bangladesh, and we tried to identify several pathways forward. So the report is actually second in the series. We first published a report for the impact of COVID-19 on the fintechs between January to June 2000, April to December 2020. And this report that I will now be sharing, the presenting on, this is based on the impact from January to June 2021. So it's rather the later stages of the pandemic. Uh, so we tried to, our key objectives for this study, if I may give a little background before moving on to the findings, was, as I already mentioned, to assess the impact of the COVID-19 pandemic on the business of fintechs. We wanted to understand how this has impacted the early stage, growth stage, and mature fintechs. What were the coping strategies, and what was the policy response of the government, regulators? How did the ecosystem enablers like accelerators, incubators, the investors, investment community, how they all helped? And we also wanted to understand what were the policy level changes and support required and at times requested by these fintechs that we spoke with. And of course, we wanted to disseminate these findings in a public forum so that we can all share the learnings and maybe build dialogue on it, build conversations on it, so that we can actually move towards building resilient and sustainable solutions for fintech growth. So this report has been, we have prepared this report and this study at MicroSave Consulting, and it has only been possible with the support and the facilitation from Visa throughout the entire process. So if I may just give a bit background, the report draws, we draw insights from our discussions with a mix of fintechs. So we spoke to several fintechs. Some of them were very early stage, some were even pre-revenue. We spoke to some growth stage fintechs that you may all have heard of, and also some of the more mature ones, which are fintechs in their own rights, but maybe a bit bigger than the regular startups that we conceive of. Alongside them, we also spoke to different accelerator programs, incubators, ecosystem enablers, and we also had the privilege to speak with representation from Bangladesh Bank, because that also provided us very crucial context on what is the scenario. So we have analyzed data from Bangladesh Bank, as well as from other credible public sources, industry reports, and we have also done our own research on this. So combining all of these, we have, and after consultative think shops, we have come up with these findings. So in this report, we mainly have some findings of what actually happened, what the fintechs did, how the ecosystem enablers supported them, how regulators have supported them throughout, and what is next? What is the extent of support required? How can fintechs, how can we remain resilient and grow without being vulnerable to the systemic or the changes in our business environment, especially in this rapidly evolving world fueled by technology. So I would like to, at the outset, before moving on, I would just like to thank all of the respondents, the fintechs and the other respondents that were involved in approaching the study. They're all listed in detail in the report, so you can find the acknowledgement there. I will not thank them out singly, but since some of them are already here, I would like to thank again Bangladesh Bank for its cooperation, and also Dana FinTech was also one of our respondents. So we'd also thank them for their cooperation. So having said that, I would now like to get this started. So let's first look at how the COVID-19 impacted fintech. So we know for a fact that digital payments increased. Right. So COVID-19 had a polarizing impact on fintechs actually, on two opposite ends. Those with the digital readiness, the infrastructural and operational setup, they could actually capitalize on a growing opportunity. But the rest were, unfortunately, many of them were laid aside or at least slowed down by the pandemic. So that is where we are talking about the effect of digital payments, because those in the payment space flourished more than the others. Uh, Digital payments increased during the pandemic. At February 2020, it was uh, US dollars, 11.8 billion US dollars. And at June 2021, it rose by 76% to $20.85 billion. So that is a huge growth fueled by the pandemic. And uh, while there had been some speculations, or we were wondering, is this a very temporary or transient thing? Whether this will really decline, nosedive after the pandemic. But we've seen that this effect has, if we see the Bangladesh Bank data for digital payments, for cards, EFT, internet banking, mobile financial service, agent banking, if we see this data, then we can actually see that the trends are continuing. While yes, certain use cases such as, let's say, salary disbursement through digital channels like mobile financial service, that peaked particularly during the early months of the pandemic until September 2020. That has declined a bit since then, but many of the other increases in the other use cases, they have shown that they're sustaining and they're here to stay, not just for the 2-3 months or 5 months of the initial first wave. And another interesting finding that we've had was that uh, during this COVID pandemic, for mobile financial services, the peer-to-peer cash transfer transaction surpassed cash out for the first time. So we do not want to read too much into it, but we believe that this is a sign that people are finding greater confidence in the concept of these wallets, not just MFS, but any kind of other wallet-based systems. And they want to keep the money within the ecosystem. They're doing merchant transactions, utility bill payments, sending to other people. So it's not just cash in and cash out, which was the first step, the first crucial step to this kind of digital use case for MFS wallets, at least. So while I have been talking about the payment fintechs, such as the mobile financial service providers, there are also the PSO, the payment system operators, the payment aggregators. They have enjoyed growth. But at the same time, many fintechs that support banks, NBFIs, or partner with retail merchants, they suffered for a short duration because of the pandemic's effect on banks, on micro merchants. But many of them were able to bounce back, and they have a roadmap to getting back there. So there are many ways to, let's say, categorize different kind of fintechs or even startups by their growth journey or funding. But for the purpose of this study, we defined early stage as those who have monthly revenues less than 10,000 US dollars, growth stage with monthly revenue 10,000 to $500,000 US dollars, and we defined mature fintechs with those who had more than 500,000 US dollars of monthly revenue. So many of the early stage startups simply perished, early stage startups or fintechs. And other than, let's say, the most participative or industry experts, insiders, we don't even, many don't even know the names of those, because the model of startups, as we all know, is that most of them are meant to fail. Like out of 100 startups, like maybe 5% or less actually make it. So it is not surprising. Many of the early stage startups actually perished. But among the survivors, many of them rebuilt their business models from the ground up. They had to think about different kind of strategies in the face of the pandemic, in the face of shifting consumer demands. On the other hand, the growth stage fintechs that we are more familiar with, they focused on operational efficiency. Many of them also pivoted to providing essential goods and services during the pandemic to recover lost sales. This was a very interesting highlight that we received from both the fintechs as well as from the ecosystem experts. A little bit more on that later. And the mature fintechs, we've seen that they have had the luxury of growing pains. they recruited more people, especially in tech teams, and they had to work to improve their tech stack so they could smoothly handle the increase in traffic. So this pandemic was in a way a very spontaneous stress testing for a lot of systems in another way. Accelerators and incubators, on the other hand, they helped build the resilience of early stage fintechs and provided them advisory services. Investors helped growth stage fintechs to pivot and also guided them to digitize their operations. In few cases, there was also some help with mature fintechs to network with stakeholders and search for bridge funds, but we found that most of the more mature fintechs were capable of handling the situation on their own. Of course, the government provided funding for startups through several initiatives. We have listed them all in the report. Bangladesh Bank also released numerous supportive guidelines for fintechs. For example, the personal retail accounts for micro merchants to accept digital payments, and also a Bangla QR or a QR-based payments that transform physical retail points to digital touch points. So these guidelines collectively help fintechs, especially those in the payment space, but also in the other spaces, to effectively partner and work together. So the customer sentiment has changed throughout this pandemic. People have grown more resilient with lessons from more than 18, 20 months and after more than 1.5 million COVID cases. So digital payments and online sales, as I have said before, they still remain high as people have embraced this convenience, and consumers, regulators, and thought leaders have praised the role of fintechs in supporting the nation during these challenging and uncertain times, which actually contributed to help improve the public perception of not startups in general, but also fintechs in many ways. So we've realized that fintechs need to take a fresh look at some of the things to the approaches to recover and grow. They need to understand the importance of both resilience and relevance. So for that, we have some specific points. The first is that strategic partnership has been the most emphasized aspect by nearly all of the respondents in our study. Let me just quote a few examples, which are, so fintechs can like partner with mobile network operators or e-commerce companies to gain access to a customer base, lower the acquisition cost. Fintechs can also partner with FMCG companies or distributors or even other fintechs. And we have actually seen that fintechs partnering with banks and NBFIs is quite a decent, it's a good model. It's a good way to build that trust and have that system. So we've seen that working in isolation, working in silo is something that really does not work in this kind of industry, certainly. And while this is again quite intuitive to many of us here, but it was a finding for many of the early stage or growth stage fintechs. They had to learn this lesson in a difficult way. Whatever the case, the fintechs will find it difficult to survive and thrive without a collaborative mindset in mind. So yeah, also there is no doubt that technology will play a more empowering role in building this building our future, especially when it comes to financial inclusion. However, fintechs should build tech solutions based on human-centered design. They should also not ignore the potential of prospective phygital models and agent or merchant-assisted digital solutions, because we need to keep in mind about the large customer segment and the citizens of Bangladesh who don't really have that capability yet. So they should not be left behind just because they lack that, let's say, access to smartphone or that ability to use that app interface. And the third point is that it's a no-brainer in terms of controlling the cost. The direct-to-consumer operations for a new entity is a cash guzzler, and fintechs have no choice but to manage the expense across entire operations to stay resilient, and more so in these like vulnerable times where there's a lot of changes. Finally, fintechs can also innovate in terms of use cases to gain a competitive advantage and serve the customers better. As we are seeing more and more in our markets, they can think of providing solutions for cross-border remittance, collateral-free instant credit, or some purposive goal-based savings, microinsurance, BNPL, and so on. So these will keep the fintechs relevant in an ever-changing market. Now, while none of these ideas are radically new, but it is the finesse and of the execution, that's actually the name of the game, that will separate the winners from the losers. And we are yet to see that level of finesse on a massive scale in Bangladesh, apart from just a few entities. Fintechs also had to learn a lot during the pandemic, and sometimes it is the failure that teaches us more than the success itself. We've seen that fintechs facing existential crisis, they realized that in situations such as the pandemic, it sometimes might be prudent to take a step backwards and focus on profitability instead of chasing that high growth, which is the standard goal of the startups, at least, or the startup model. We also observe that it is easier to get additional funding from leveraging your existing relationships with investors than try to secure new deals. And again, this is one of those intuitive things that a lot of fintechs that we spoke to, they had to learn it the hard way, unfortunately. And the pandemic taught us that when the market undergoes a massive shift, especially in this consumer preference and behavior, fintechs must find or adopt a way to pivot accordingly. But pivot is quite a buzzword thrown around in the startup ecosystem. We have to exercise caution while using pivoting as a strategy, because fintechs should understand this better, that it needs deep expertise. And this agility we have seen from a few fintechs only. As I said earlier, the incubators and accelerators have a definitive role in supporting the startups. The first and obvious support is scouting for funders and making the connections. However, as mature fintechs and experts from the industry have indicated to us, getting funds is not the only support, or not even the primary support that they really need or want. Fintechs require platforms for bridging gaps between stakeholders, and also for focused technical assistance for what they will not build in-house outside of the core competency. While such platforms exist for startups in general, there is a lack of focused support for fintechs particularly. And realizing this as one of the significant missing links, we at MicroSave with A2I and UNCDF, we recently announced the FinLab PD platform. There are also several other platforms like that, but this is the first one that focuses specifically on solving the problems of the low and moderate income segment and improving their financial health. So let's just remember that the core promise of platforms like these lies in this multifaceted support. And this is something that we found the respondents of our study request or demand, that there should be more of this in the ecosystem. Also, in addition, the incubators and accelerators can support a innovation sandbox to conceive of something like that, where fintechs can test their ideas, which is distinct from the regulatory sandbox that we already have, which has a different purpose altogether. I think another lesson or learning from these ecosystem enablers and experts was that there are also certain mindset shifts that they caution the new fintechs or the early stage ones, that many of them first approached COVID-19, as many of us did in other industries, as a fixed event in a discrete point in time, rather than a continuing phenomenon. Now, while COVID may have waned away, it comes and goes in waves, or the effect may remain. What COVID has taught us is that any kind of sudden shift in socio-cultural trends, in demand, in technology, in regulation, a fintech in today's vulnerable, volatile, uncertain, and rapidly changing world, we need to have that agility and that ability to adjust ourselves on the fly, on the go, which has become very crucial. And that is actually what resilience is, that ability to adapt. So they have continuously emphasized that when it comes to new investments, these investors seek to support the fintechs that show this kind of mindset. And also another caution or recommendation rather has been that fintech is such an industry that domain expertise is invaluable. So due to the nature of this fintech industry, investors realize that there is a need for domain expertise among co-founders, or at least through a strategic partnership with others or some senior management at the firm. Investors could also use their networks to build these connections, as they have advised us. Now, the government has also, while we agree that the overall ecosystem requires support and blessings of the government policymakers, they have already done a great deal for fostering innovation among the startups, especially the fintechs. If we talk about the different circulars released by the government, there has been the guidelines for white label ATM and merchant acquiring. There is the Bangla QR, among others. And also the IDTP is going to be launched soon, we hope. We have seen recently in news and all that the UAT is ongoing. So we believe that the interoperable digital transaction platform, this will establish this interoperability, which will allow customers to transact across multiple players and help the smaller players gain customers' confidence, as they prefer to keep funds exclusively in the wallets of the market leading players as of yet. And the startups, the fintech startups we spoke to, the startup ecosystem enablers, regulators, they have all agreed that interoperability will actually further spur the fintech industry's growth while benefiting customers at the end of the day. So customers can choose how they transact, who they transact with, where they transact, and potentially with lower fees for transferring as well, we hope. Now, while the government and the regulator, particularly Bangladesh Bank, have done a great deal for fostering innovation among startups, which is well acknowledged, the industry believes there is still a lot of potential to do further kind of work. So Bangladesh Bank has already been very pro-innovation and proactive, and it can continue to be in that way in order to, let's say, monitor the early stage, or let's say the smaller fintechs, before they grow even bigger. So it can have a separate cell for that. It can conceive that sometime. Also, the regulatory sandbox, the RFFO, it also needs a bit more visibility and promotion. While it is being effective in the sense that the facility is there, but it perhaps needs a bit more promotion in that regard. And the fintech industry is no different from any other industry in the sense that it demands more relaxed tax regime. The government may introduce policies to lower taxes on startups, as Bangladesh has one of the highest corporate tax rates in South Asia, as we all know. The government may also consider exemptions or deductions for startups on the lines of special dispensation for like ITES has those exemptions. Government and regulator can also work on smoother holistic implementation of some centralized digital solution for business identification. UBID is something that we have been speaking or hearing a lot about lately. So this can be one way where we have a shift from the traditional trade license regime, which has its own complications and issues. So with all of these notes, I would on this note, I would like to end this presentation, and I hope that I have provided some food for thought for today's broader panel discussion. Thank you.
Thank you very much, Mr. Anik Muntasir Chowdhury. This was very nicely articulated a presentation of your report that encompasses everything. I think, as you said, that we really had a lot of food for discussion. I mean, the further discussions by our panels. So next in the line, we have Mr. Sadat, who will be, commenting on the report. Highlighting his banking sector as a stakeholder in the ecosystem and the impact that banks suffer due to this pandemic. And I would request Mr. Sadat to narrate your experiences, including the concept and definition in details. So before give the floor to Mr. Sadat, let me just tell a little bit about him. He had been in this sector for last 15 years, having a very, I would say, formidable track record, serving in 3 leading corporate houses of the country, like, Bikash, Grameenphone, and the Citibank Limited. So he has keen expertise in DFS, sales, distribution, channel management, merchant business, and service. Last but not the least, he is also a founding member of the Digital Finance Forum of Bangladesh. He's performing the crucial job of treasurer, I would say, and he's performing very fantastic. So without further ado, let him say his part. So Mr. Sadat, floor is yours. Thank you.
Thank you, Zulfikar for your beautiful introduction. And I also want to thank Digital Finance Forum Bangladesh for allowing me to present and share my insight about the subject matter. I also want to thank Mr. Muntasir Chowdhury for his beautiful presentation. Actually, the COVID-19 pandemic has affected the banks to a great extent. The overall NPL has grew by more than 7% to Taka 950.85 billion during the January-March period of 2021, despite providing policy support by the central bank in relation to loan classification. The Bangladesh Bank also predicted that the weaker asset quality due to higher level of performing non-performing loans and poor profitability condition may further worsen the banking sector performance in the coming quarters. So these are the current banking industry situation I'm telling about. Bangladesh Bank statistics, we have been gone through the Bangladesh Bank statistics also, and we have seen that there is excess liquidity in the banking sector, which is nearly doubled from 1.03 trillion in January 2020 to 2.05 trillion in December 2020 due to low investment in overall economy. Private sector credit growth decrease also significant, which is 8.29% in April 2021 on a year-on-year basis from previous 8.79% a month ago, mainly due to the second wave of COVID-19 pandemic. Due to excess liquidity, people living on interest income will earn less. Bank will also push loans further in low interest rate to large corporates and individual customers, which will further increase the risk of NPL. However, this excess liquidity may not get directed toward MSME, SME, and FinTechs due to banks having various concerns over NPL, non-performing loan. But I must say that I must agree and say also that Bangladesh Bank has given some excellent policy support to SMEs and FinTechs. In recent circular, which we have, you have also probably seen in MSC and Visa joint report, that the Bangladesh Bank formed a USD 58.87 million fund to a startup in March 2021. The Bangladesh Bank will support the refinance bank so that they can disburse loan to clients and startups. New entrepreneurs can receive funds from this scheme at a maximum annual interest rate of 4%, with a repayment tenure of 5 years. The Bangladesh Bank is also working with the World Bank to introduce a partial credit guarantee scheme with an initial USD 300 million to share some of the potential losses with the banks that impacted. This will support early stage fintechs to avail the credit guarantee scheme to enjoy collateral free loans, which will be provided through commercial banks also. About the, I want to say that the current banks as a stakeholder in the ecosystem, banks are doing pretty much well in conjunction with the fintech industries in Bangladesh. The banks are currently working with working to establish an interoperable digital payment platform as per the guidance of Bangladesh Bank. The interoperability will work within banks, MFS, and PSPs. Also, several of the banks are working on the personal retail account (PRA) to increase the number of small merchants. Although bKash is well ahead regarding this issue. And there is also escrow service where commercial banks are also playing a crucial role, of course, within the purview of the central bank's guidance. As per the direction of Bangladesh Bank, the commercial banks are currently restricting banking services to unauthorized PSOs, PSPs. Government has announced multiple stimulus packages to SMEs, including fintechs offering credit solutions. In the entire ecosystem, the banks are playing a very crucial role throughout their hardest hit in the pandemic. If you see that Bangladesh Bank policies and guidelines, you will also find out that many of the funding support of fintechs are provided through formal banking channels. While developing new products, and fintechs are also partnering with banks too. In fact, as a important partner, fintechs and banks are very collaborating very boldly, and I would say very beautifully. In many of the cases, banks are partnering with fintechs to deploy new technologies that are beneficial for customers and giving fintechs to earn a chance for revenue. For example, just recently, Citibank has jointly introduced Nano Loan with Bangladesh's first unicorn startup, that is Bikash. And also IDLC, though it's not a bank, it's a non-banking financial institution. It also introduced Bangladesh's first digital service scheme for customers with very attractive interest rate. Already mentioned in the presentation that Talikhata, mentioned in the Visa and MSA report, that Talikhata is working with BRAC Bank and already completed a successful pilot run. And they are also working to embrace partnership with several other banks. There are also examples in healthcare and fintechs, digital healthcare solution, a healthcare solution-based fintech, I would say, that they are also working with RMG and the Citibank Limited to offer various insurance, digital healthcare insurance and product-based solutions to RMG workers specifically. And this type of offering are helping the RMG workers, especially in that during that COVID period. They're actually they're also offering micro insurance to RMG workers, which benefited them to a great extent. There are also established relationship between banks and MFS, where MFS can easily draw money from bank account and credit cards. This also helping the customers a lot, since during COVID-19 period, the customer actually couldn't move further to banks to get their hard cash for their day-to-day needs. But in this case, MFS agents are helping the customers to get the money, especially during the pandemic situation, where transport absolutely were not available, and bank branches were far ahead from the customers. And also, there are some various projects between that banks have taken, like the Prime Bank, that they have introduced digital loan-based services for RMG workers, which can be available instantly and in a very interesting ways. In a conclusion, I would like to say that as an integral part of the country's economy, banks are the most important part in the overall startup ecosystem. Banks are receiving very good guidance from the government and Bangladesh Bank. However, we should remember that startup ecosystem is ever changing, and both Bangladesh Bank as well as commercial banks should change according to need within the very short time. And I think that in this term, I would also again reiterate that Bangladesh Bank and both the commercial banks are doing wonderful. So this is from my part, Zulfikar bhai, up to you.
Thank you, Sadat. This was quite informative, and you said much about the banks, including the MFS and the relationship between these two important stakeholders in the financial ecosystem. So now we'll be moving towards the horses domain, and I just already said that we have the representation from the central bank. We have Mr. Bayazid Sarket, who is a Deputy General Manager of Bangladesh Bank, looking after the Foreign Exchange Policy Department right now, presently. Mr. Sarket is a very experienced and seasoned banker. He has experiences in bank examination, treasury management, risk management, banking regulation, and policy research works. He is a true academician, I would say. He did a very meaningful, development in the banking sector. He theoretically structured the migrant-sponsored banking, and which is now well evolved and running in the country. The NRB banks. So, last but not the least, he is an adjunct faculty of MBA program of the Northern University and Southeast University, and also a guest speaker of the banking department of Dhaka University. So, sir, welcome you to this webinar, and I will be happy, rather, I'm sure the guests, the participants also will be very happy to know the...
Thank you, Zulfikar bhai. I understand that if I can finish it earlier, that is better. So,
okay. No, yeah. It's okay. Let me just spell out the the points that you be requested to discuss on. So not today on the regulations. Rather, I would be happy to listen some portion of the regulatory perspective, which has given the resilience in this pandemic situation. So please, floor is yours. Tell us about the resilience and the regulations. Thank you.
Yeah, thank you, Zulfikar Bhai, for your nice moderator role in the program. And first of all, I'd like to thank today's presenter, Mr. Sadat, sorry, Mr. Anik Muntasir Chowdhury. And I think it's quite a good job, because he covered the most of the areas in the FinTech of Bangladesh, and their support from the visa and MicroSave consulting, that is also remarkable. So my dear audience, so I will try to finish it earlier, and I will be happy, and I love to make your answer when in the question answer session. So before coming into the question answer session, that I would like to go through the prescribed role of the panelist as a panelist. So I will follow the regulation and resilience matters. So Muntasir, Zulfikar Bhai already said that the regulation has already covered, but I would like to touch on a couple of things that central bank has already take care about the regulations. That's we have also issued the interoperability circular regulations. So we have already discussed the Bangla QR code that is also imposed in the FinTech areas. And another important thing is the central banks has pushed the FinTech industries to involved in the cash distribution, especially the when government wanted to distribute their cash incentive or cash allowance to the 5 million distressed people over the country, then the central bank and the Bangladesh, central bank and the government together able to involve all the FinTech industries in Bangladesh. So that is also a remarkable thing. And that also pushed the FinTech industry to come forward and are more attached with the digital finance. So here, the one thing that couple of things that the presentation has covered, that the pandemic actually pushed the FinTech industry to get their more resilience and to improve their efficiency even. So it helps the mass adaptability with the FinTech, and also, yeah. So can you hear me? Hello.
Yes, we can hear you.
Okay. So, and regulatory motives actually influence the further digitization of or digitization of FinTech and even other business entities. Not only FinTechs, the other business entities also come forward to be more digitized during the pandemic. So this is one of the good results for the pandemic and our FinTech industries. So now come to the resilience, because the resilience has already proven in case of Bangladesh. So in the FinTech industry, we have proved that our resilience, but at the same time, our economy also proved they have experienced with good resilience, because before the pandemic, our growth rate was much higher, 8.2%. And during the pandemic, it's come down to 3.5%. When come to the new normal, then 5.5%. And hopefully, post-pandemic period, that means coming 2022, first fiscal year, we will be able to achieve our growth at 7.2%. So this is the economic growth. So an economic resilience. I think this resilience helped us to prove our resilience even in pandemic. So I think Muntasir has another research he conducted with the MicroSave consulting firm, that he proved that the cool-in crisis, his topic was cool-in crisis, how Bangladesh MFIs stay resilient. So during pandemic, even if we think that before the pandemic, if we think about the other stressful situation, even the when we faced the natural calamity and other flood, storms and other things, then we also survived. We proved that we had some resilience. Even if in when the in global financial crisis in 2000, we took advantage of Walmart effect, you know, that global business community was just warning that Bangladesh may face a problem because the global purchasing power, even the in the developed countries purchasing power dropped down. So that's why Bangladesh may face some problem, but ultimately we achieved the another resilience that is defined as Walmart effect. So all of these, I think the central bank, central government, and together with the all people, policymakers, and you, the think tankers who actually involved in the business fintech industry. So all we are working to survive from the any stress situations or any disadvantage situations. So that's totally, we ultimately proved our resilience. In this line, we have, you know, that the Bangladesh Bank, together with the central government, we have taken above 1 trillion BDT stimulus package to maintain our resilience. So in the and the Muntasir and the Sadat also pointed that the we have some stimulus package and within the stimulus package we have a couple of things are most of the things are actually the refinance issues. So this is the resilience issues. But at the same time, if you think and if you expect from the central bank or regulator many of things and couple of things that we will just nurture, we will incentivize the fintech industry. Yes, we are ready to incentivize the fintech industries, and we will nurture the fintech industry. But at the same time, being a regulator, we have to think about the other thing, other risk measures. So that's why sometimes we have to think about the digitoxical issues, that is negative externalities. If we think that in the form of in the area of economic policies, we have to think also the negative externalities, because we expect and we support the fintech industry to develop in such a way that that will not create any income inequality, and their emphasis on profit maximization regardless of sustained development. And also we will be aware of exploit the regulations gap like by the monopolies, and that gap actually may create the monopoly in the industry. So that's all together. I think I could cover all the things. So I will wait for the next question and answer session. Zulfikar bhai, thank you for your kind time here. Thank you.
Thank you, Mr. Bayazid. It was really nice to hear from the regulator in this kind of discussion all the time. So very proactive regulations during the pandemic we saw, and this is a wonderful part being done by the central bank regulation part to foster others. I mean, the FinTech, other e-commerce, other banking sector, financial sector, everything. So moving on to the two of the panelists consecutively we'll have from the FinTech side. Now, Ms. Amor Maclang, who is the vice chair that I already said that Global Impact FinTech, that is GIFT. She is leading the ASEAN chapter. So I need not to, give further introduction of this gracious lady. Rather, I would be very happy to listen to her. But then before giving the task to her, let me just put some of the things. Ms. Amor, if you can highlight the pandemic, how the pandemic affected the fintechs globally. We have heard enough about the Bangladesh. So can you just highlight something about the globally how the fintechs are being affected? And what is the impact of early grown up or the matured fintechs in particular, and how it influences financial inclusion or the whole of the ecosystem in totality. So if you can kindly highlight on these aspects to Ms. Amor. Thank you.
Hello, good evening. It's almost morning here in the Philippines. Thank you very much. Assalamualaikum to all of you. I don't know how competent I would be to talk about the global fintech landscape, but what I can certainly share with all of you would be a snapshot as to how preeminent our role as Asians in the global fintech landscape. So in the Philippines and in ASEAN, we in the fintech space has been a net beneficiary of COVID. I heard earlier how there has been a variation in journeys within Bangladesh as it pertains to fintechs, but overall, here in ASEAN and in the Philippines, it has been rather positive. As a matter of fact, because I would say of the pandemic, the Philippines has birthed its first unicorn. As a matter of fact, it's our first duocorn. GCash under Mint, one of the co-conveners of Digital Pilipinas, our movement here in the Philippines has been birthed. I remember in the last World FinTech Festival in 2020, they announced that they had breached 1 trillion peso mark in terms of transactions. And then less than 1 year after, in November of 2021, they have now declared that they're a duocorn, the Philippines first. Now, these progress are not without its risks. One of the reasons why I could not miss this particular panel because while we have an uncommon journey together, let me just leave it at that. In 2016, both the Philippines and Bangladesh was in a very interesting crossroad as it pertains to cybersecurity. And just over the weekend, the Philippines has had one of the biggest challenges, as it pertains to cybersecurity following that 2016 incident. One of our domestically important financial institutions was under cyber attack, and right now there are risks that have been more pronounced than ever. What happened was that there was a redirection of certain funds from a legacy bank to a hybrid legacy and digital bank, which was then directed to a crypto exchange, a non-regulated crypto exchange. So this is a challenge for us, given the fact that the Philippines has recently been placed in the 2021 FATF list for cyber crimes. And there has really been an attendant increase in vulnerabilities in the same manner that there has been an increase in the number of digital transactions. So what this calls for is a whole of nation and a whole of society approach towards cyber crimes. In other words, an attack on one institution is not just an attack on one institution, but actually an attack on a country. So the vulnerabilities are even more pronounced. And the challenge is not just to create a cyber secure environment for organizations, but rather for us to work together so our countries are cyber defended. So I think given the unique journey we both had in 2016, we look forward to further cooperating with the FinTech Association here in Bangladesh. And in behalf of the Global Impact for FinTech, the largest think tank, private sector think tank of advocates in FinTech, we'd like to invite all of you to collaborate with us.
Oh, thank you. Thank you very much, Ms. Amor. That was very nice hearing you, that you had been, brought up a very segregated topic, but very important, the cyber security aspect of the financial ecosystem. So the vulnerability that you said, we had a similar, incident that I'm sure that you had been, indicating. So we will look into this. I'm sure that we have this representation from the central bank in the participants. We have many of the central bank employees are here. So they will take this advice into cognizance, and then we will work together hopefully in near future. So thank you once again. So moving on to the next, the panelist, Mr. Jia. He is basically the co-founder of and the CEO of Dana FinTech. He has certainly 10 years of banking experience and 7+ years of business experience in the technology sector. So with this couple, couple to each other, he's the unique person to say about something regarding the fintechs. To Mr. Jia, I have specific questions for you. Is there any new product brought during this COVID-19? And what are the opportunity that captured in the products, and any untapped opportunities created due to this COVID-19? We have heard that we had a splendid growth, but how it actually happened, if you can just highlight. So floor is to Mr. Zia. Thank you.
Thank you so much, Zulfikar bhai. Assalamu alaikum. Good evening to everyone. So it's my pleasure to be here among these distinguished guests. So thanks for arranging this webinar, and this is a very timely subject matter that we're discussing here today. And I just went through the whole report, and that's an tremendous work went into this report, and I thank the authors for the research and everything. So coming back to the question of Zulfikar bhai, absolutely Zulfikar bhai, you are right on point. And what more coincidentally, the last week Citibank and bKash launched their nano loan commercially, or I would say officially, before the soft launch. And you see, this has a revolution considering Bangladesh market scenario. So far in the fintech, or I would say in the financial sector, we have been seeing that this scenario has been dominated by the banks and non-bank financial institutions. And in the rural or in the suburban areas, MFIs are also very active. But unfortunately, on the technology side, we haven't seen much innovation rather than these bKash and other MFS, what they have brought into the market until recently. So this is really good to see this new product launch of through collaboration between bKash and Citibank. And I congratulate the team who has been behind this, because this is actually the partnership model that the whole world is now following into. These banks and the fintechs and the technology companies, because you see the banks have this unique capability. They are founded very strong foundation. They can support new innovation. They can service lots of customers. But at the same time, since they are very big, agility is not into their fore. Whereas fintechs being very agile and flexible and creative at the same time, they can bring in new ideas, new solutions, everything. So combining this a strong foundation with the agility gives a very unique prospect to bring in new ideas into market quickly. So coming back to your question, this is a kind of a product or collaboration that we look forward to see in the market. And this bigger Citibank Nanoloan collaboration, I would say, is a very timely and unique new product in our market. And because of the COVID, I think people's acceptability to digital payment and other things has increased quite significantly. So you could see the e-commerce's transaction has grown significantly. This digital payment, people are now more acceptable. Even, and with all due respect, even our banks who are also not sure about this technology changes that will happen, that when this would happen. Now, because of this pandemic and the changes in the overall financial sector scenario, so everybody now even accepts that there will be changes. Maybe there is a question when and how, and this is where we will need collaboration and input from everyone else. But the best part is that now everybody knows the changes there, changes in the wind. So we're gonna see those changes and everything. So, and because of these changes, and we are also hearing from you guys about this interoperability, this collaboration and everything. And I personally believe once this IDTP or any kind of interoperability platform is implemented in our country, we will see a major boom in the overall transaction, fintech, financial technology and everything. So we are looking forward to that. And I think new ideas will come into play once this interoperable transaction comes into play in our market. Thank you, Zulfikar.
Thank you, Mr. Zia. So we are in the last 20 minutes of the webinar. So we have to be very, careful regarding the timing. We'll have another round of, questions for all the, panelists. So first, I would like to ask Mr. Sadat, how did conventional financial organizations like banks, where you are actually residing right now, adopted these fintechs during COVID-19? Be very, very specific. Thank you.
Thank you, Zulfikar Bhai, for giving me the time once again. Interestingly, banks of Bangladesh during such hard time didn't sat idle. They have seen the opportunity and tried to grab it from the very beginning. One of the most important things that many of the banks tried to do is eKYC-based customer onboarding during this pandemic time. Many of the banks jumped into this wagon and developed the digital onboarding system within their business ecosystem. As I have expressed earlier, some of the banks also introduced digital and nano lending for customers, like the Citibank. IDLC, though it's not truly a bank, which I told to you earlier, that introduced digital deposit scheme for customers few days ago. There are also banks like EBL and Prime Bank that introduced chatbot-based service for customers that helped a lot during this pandemic time, which eliminated a need for customers to visit banks for service. Some of the banks also introduced and revamped their internet banking app. There is also a hype among the banks with Bangla QR, and some of the banks even introduced their own QR in the market to facilitate the payment for small merchants, which also helped during this pandemic situation. On the other hand, agent banking have supported a large number of customers during this pandemic situation, as well as they have supported the businesses as well. During second wave of pandemic, while the transports were restricted within the country in Bangladesh, the agents supported the customers near to its vicinity with banking services, various banking services. In fact, the agent outlets also introduced cash transfer services for local and national level business houses during these pandemic situations. Seeing this opportunity, some of the banks like the Citibank, which I work for, expanded their businesses aggressively during this pandemic time. Actually, Citibank expanded their agent outlets aggressively during this pandemic time. To tap the opportunity and reduce the customer pressure in the bank branches, many of the banks introduced online bill payment option for customers. Here, A2I, access to information, played a crucial role in bringing a large number of billers under one roof, which is called ACPay. Many of the banks also integrated with government fees and bill collection solutions through A-Challan and initiated collection bills on behalf of customers. Lastly, I want to iterate that the banks are already saw the opportunity and trying to cash it in. That's it from my point of view. Thank you.
Thank you, Sadat. Thank you once again. Now to Mr. Bayazid. If you kindly say something about how this pandemic situation helped in instilling the resilience in the product innovation. I'm sure that you must be having all the records of product innovations as a central banker. If you kindly highlight on it. Thank you, sir.
Yeah, thank you again. So we can do it in a many way, but at the moment, what we actually have done that I can share that the payment system department of Bangladesh Bank has already formed a new unit or section, that is incubation unit in Bangladesh. So they are actually responsible to look after the matter, whether the new product or new innovation is coming, and they will give the policy support for the newcomers or new innovation of the fintech. But at the same time, so we have to think about the collaboration and cooperative approach from the different government bodies. That means central bank or Bangladesh Bank is not alone to look after the fintech industry or the total financial industry. And financially, fintech actually conjugate the two things, that the total economy and the financial system. So here the Commerce Ministry and other ministry also involved. So that's why a cooperation and collaborative approach within the different ministries and organizations are very important. So at the same time, so we will think about the policy support, now considering the risk measures, risk issues, because when we talked, even Visa talked, or MSCs talked, or even the business groups are talked, when we are discussing the matters, then we are thinking about the next, what we can do, but at the same time, the backdrop or the black side of the things, actually the externalities or the risk issues, that is importantly handled by the regulators. So this is also a responsibility and important responsibility for the regulator sides. So that's why sometimes it may not be very popular for all the business entities, and usually the regulators are not very popular to the business entities. But within this, that means the risk, resilience, and the policy support, we central bank and other regulators need to balance approach. We need to have a balanced approach. So that is my point of view. Thank you very much.
Once again, thank you, Mr. Bayazid. Now quickly move on to Ms. Amor. Once again, ma'am, can you just highlight that what are the measures that been taken by the fintechs to support the customers and the general population to cope up with this COVID-19 impact? If you can highlight, keeping the perspective in the ASEAN countries. Thank you.
You see, our approach to fintech is not so much as a vertical, but rather as a horizontal that powers many industries, no, in the ASEAN region. So it wasn't just the fintech industry that benefited, but rather many other ancillary industries that really affect the people on the ground. So for example, we are the local partner in the Philippines of the Monetary Authority of Singapore as it pertains to three work streams. One is fintech advocacy via the Singapore FinTech Festival. The other is through the digitalization of MSMEs. So when we talk about fintech, we're not just talking about a high-level technology, DeFi technology that's at the imaginary experimental level, but it's really intended to benefit the people on the spot. So, for example, the digitalization of MSMEs, certain platforms and runways have been created for the region, such as, for example, Proxtera, wherein it allows for a global, a regional, and a global exchange, procurement exchange that is regulated by a trusted party like the MAS. So why this is important is because a poor coffee grower, for example, in Tawi-Tawi in the Philippines can now trade in confidence with, say, a coffee chain, albeit unknown owner, say in Hanoi. No? So that's one of the ways by which we can experience fintech as it pertains to the grassroots. Another advocacy that we are driving right now is the promotion of education. But when we talk about education, this would mean micro certification that is on the blockchain. Unfortunately, in the Philippines, we haven't progressed yet as much as we wanted. Like, say, for example, how the national ID system has been taken up in India. And it's still an ongoing journey for us here in the Philippines. The idea of identity portability, being verified, and in the process receiving services, financial services. That's still something that we're currently working on. But in terms of education, we're already following the runway and the lead of many of our ASEAN brothers and sisters, specifically Singapore. So last November, we launched a micro-certification program on Web 3.0, which we know is the underpinning for most of these fintech and decentralized finance technologies. No? Now, one of the things also, we closed the year very recently. We threw a hybrid party of sorts. And what we are really looking forward to welcoming is open finance. Now, open finance is kind of like the mother of open banking. And together with the IFC and also the Open Banking Exchange out of Europe, we have recently launched the OFOC, which is the Open Finance Oversight Committee, together with some of the largest players in the industry, along with our Banco Central. And this is very important because we are moving to a future of not just embedded banking, but embedded insurance, embedded payments, among other things. The insurtech industry in the Philippines was one of the major beneficiaries of the fintech revolution. The effects of COVID has actually showered upon them as well. And then last but not the least, I cannot emphasize it more, and I really appreciate the reach out of our friend from the Bangladesh Bank. And if there's some way we can work together in terms of promoting cross-border and bilateral country advocacy as it pertains to cyber defense and cybersecurity, I will welcome this opportunity.
Thank you, Ms. Amor. Once again, this was pretty highlighting from a different, interpretation of the fintech. That's very nicely said. That fintech is not a very, very complicated technology and technology embedded, the system. Rather, fintech is something that, as you said, that it should be facilitating the people, facilitating the regulations, facilitating the services. So I'm sure that was pretty much, enlightening, speech from your side. And once, one more thing, I'm sure the central bank people are here as well. Your invitations for the collaboration, I'm sure that they will be taking into cognizance and they will try to collaborate with you for the cybersecurity aspect of the banking sector, I mean the overall financial sector between the countries and the cross-border territory. So thank you. And now moving on to Mr. Zia. Just one thing that popped up, Mr. Zia, being the the local fintech, the company of Bangladesh. I just sometimes feel that do we have a scarcity in the fintech professionals in Bangladesh? So did you feel it in the pandemic also, during the pandemic, that there are shortage of the fintech professionals to really bring more innovations, more product in the financial sector specifically? So can you just highlight and how Dana FinTech is actually coping up with all these things to promote their product, which are in service in many ways. So Zia Hassan, I would just request you to be very brief and very precise on the topic. Thank you.
Most welcome, Zulfikar. Zulfikar, you may be watching that I was smiling while you were asking me this question, because is that on a lighter side, I don't know how it is very difficult to leave a high-paid banking job and then coming into this unknown territory. So that's the reason I was smiling, because it is a difficult journey, and sometimes it is very lonely journey also. So coming back to your question, so if I segregate the question into two parts, so fintech and tech. From my opinion, I think it is difficult right now. We are I can share my personal experience. We have been trying to recruit more people on the technology, and it is really hard to find very good technology resources right now. And because of this pandemic, another thing is happening, which is also very challenging for companies like ourselves, is that now, since people are more used with work from home, even global companies are recruiting people from our country. So for example, I can cite one example without naming the person's name. He was working in a company earning around 1 lakh taka, 100,000 BDT. And now he earns work for an American company and he's earning more than 400,000 BDT. You can understand. So those things are happening, and we just completed our accelerated journey with Accelerating Asia, and in our batch 9 startups from different countries were also part, and they shared the same phenomena here. So we are seeing a scarcity in the technology domain, and if I go back to your first question, yeah, I think technology as a whole, we are seeing a scarcity, and fintech, since this is a specialized domain knowledge, I think there is still more initiatives to be taken, and more people who are crazy enough to jump into this unknown territory should come into this field to create this momentum or making changes in this territory. Have I covered it all, Zulfikar bhai, or I missed any of your question?
No, it's okay. I think pretty well done. So thank you once again, Zia bhai. I think we have done the part from the panelist. Now it is the audience's, responsibility to get yourself clarified. If you have any queries to the our, the reputed panelist we have here, and also from the presentation slide, if you have any queries, you can. I don't know, Mr. Nasim bhai, can they raise a hand, or you can just straight away ask the questions if you have any? Audiences, the floor belongs to you now. So I don't find anyone.
I think there are some questions in the chat box. So you can...
Yes. I tried to actually, look through the chat box, but then no, there are a few kind of suggestions.
Yeah, most comments, right.
Mostly the comments. So there is no specific questions. So anyway, if there is no questions, then we have to take to be assured that we have understood everything, and the panelists were, more generous, and they had been telling the things that we understood in a nice gesture. Anything from the DFFP, I mean Digital Finance Forum convening committee, Mr. Nasim, do you want to say anything? Or I think we have one question. Is it a question, or let me check? Are freelancers of Bangladesh taking service payment in cryptocurrency? In this case, what kind of policy support needed from the central bank side? So, Mr. Bayazid, I think if you just highlight something on this issue.
Yeah, thank you for question, because we are thinking about to support our service exporter or the actually the freelancer. So, but the thing is that we have to think about the more risk associated things, and we have to think about the FATF recommendations or their others measures. So to balancing with the risk factors and the support to the service exporters, it is very challenging to come into a new policy. But I know that the central banks, even I am also involved with this work, so the central banks is working on it, and hopefully we will get a solution.
So thank you, sir. This is pretty encouraging that the central bank is thinking over it. So the freelancers, guys, you should be very happy that something would come very soon. So at the end, I would just like to thank all the panelists, especially in this winter night. You had been taking a lot of pain to be in the webinar for last almost 2 hours, and sharing your experiences, your insights regarding the fintechs and the impact that COVID-19 had over this fintech and the overall ecosystem of the financial services. Mr. Anik, who had been pretty splendid in presenting the executive summary of the report that has been done by the MicroSave Consulting with support of Visa. So thank you once again, the presenter and the panelist. Specifically, I would like to mention Mr. Bayazid Sharkar, who happens to be very, very, giving us encouragement from the central bank side. We had Mr. Sadat, who had been, very informative, giving a lot of, the informations regarding the whole of the topic on today's webinar. We had Miss Amor, happens to be taking a lot of pain because she said that it is almost morning in her time frame. So thanks for taking the pain, the gracious lady, Miss Amor Maclang. And last but not the least, Mr. Jia Hassan Siddiqui, well done. You had been doing pretty, well in the fintech domain in the Bangladesh. I mean, locally you are doing fantastic. So thank you very much, all the panelists, presenter, and last but not the least, thank you, Digital Finance Forum Bangladesh, which is a non-profit organizations. We all are here making this kind of endeavors to tell something in different format, like in the webinar or the panel discussions. So please be with us, support us. We'll be very happy getting your support in the days to come, and we'll be in touch for discussing different kind of important issues like today that we have. So thank you, our host.